Hey, so before you pull the trigger on the Robinhood Gold ecosystem and the quote unquote free money that they're throwing around, I want you to be really clear about what Robinhood's profit motives are and if they're in your best interest. And depending on where you are in your wealth journey, that you make an informed decision about what's best for your situation. For me, if I'm a parent and I have a child that might be interested in investing, Robinhood would not be where I would go. And I'll break down an interview that Vlad had along with a breakdown of their annual financial report to look at really where their profit motive is and and then really have you make the decision on if it's best for you. So first, I'll cover the pros as I see them from the Robinhood ecosystem. The first is they have an amazing UI. So between Robinhood and Fidelity, I think they provide a superior way to view all your assets. Robinhood makes it really easy to place trades. They're fee-free trades. When I did just a cursory review of their security, it looked like they had two-factor authentication. Agent responsiveness was really strong when I was asking questions. Even though I had a few bucks in a brokerage account, they were very responsive. They are also publicly traded, so a lot of other brokerages like Fidelity, they're privately held. There's pros and cons to that as well. I think it's admirable that it's a publicly traded company. We can look at their financial statements and get a better view into how they make money than we can with private firms. And so those are the good. Also, on the good side, they are the only brokerage that is giving money for to savers who make IRA contributions, and if that encourages people to start investing in their retirement early, then I think that's awesome. I also did an assessment and looked at how do they recommend stocks. On the IRA side, they have an IRA tool that offers investment advice for different ETFs that someone can invest in. But those were the pros that stood out to me. I'm sure there's more. If you're a big Robinhood fan, don't take the rest of this as me telling you not to work with Robinhood, but just perspective from me and what I would caution anyone on understanding some of the potential pitfalls of this ecosystem. And so to do this, I'm gonna break this down through an interview that Vlad, their CEO, gave when the gold credit card first came out, and then also look at their financial statements and compare it a bit to Fidelity before coming up with a final conclusion.
I've been saying for a while that what we'd like to do is build a world where for our customers, all of their assets are custodied at Robinhood and every financial transaction goes through Robinhood.
Okay, so what you saw in that first clip is confirmation of what we've been talking about in this video, that Vlad clearly wants people to play within the Robinhood ecosystem. And when you start trying to play outside of the ecosystem, after you get into it, there's different fees. The gold credit card doesn't do statement credits. It only puts money back into the Robinhood brokerage, which again, if you're playing at within the ecosystem and you're happy with it, then it's not a problem, but it does limit the amount of flexibility you have.
I think, credit cards are one of the most profitable segments in financial services, possibly the most profitable.
Yeah, because they don't give away that much cash. They have limits on what they set on it.
So in this clip, it's surprising to me that the CNBC analyst doesn't quite understand how much profit is in credit cards. Let's be honest, if you have a debt today and you don't pay your bill every month, you're paying probably 20 to 30% interest on your purchases. And for a lot of people, that's revolving, so they never pay it off. There's trillions of dollars of credit card debt that costs people so much money, which hurts you and profits these companies. And so then in this next part, he talks a little bit about who the gold credit card may be for. So let's look at that.
It's also an amazing card for people that are building credit. This might be, in my opinion, one of the best credit building cards out there as well. And for customers that are using it to build their credit, we do earn the economics on those balances.
So I really transparently hated this part of the interview for a few reasons. So he says that the gold credit card is great for someone looking to build credit. The problem I have with the gold credit card is that it's very focused on this marketing spin around it being gold and attracting people, the 1% credit card for anyone. And so when we talk about someone that is trying to build credit, and he's talking about profiting off those people, because what he's saying is if they have a balance and they don't pay it off, we get 20 to 30% interest on the debt that these people hold on to. I'm going to do a credit video later, but you do not need to go into debt and have a revolving debt with a credit card to build your credit. In fact, that's the worst way to do it. And so if anything, it just gets you into a debt trap. And so that's part one. And that's why I might give a little bit of pause in this ecosystem as we think about who Robinhood is really targeted for. In my opinion, it's targeted to younger people that might not have experience with investing, might not have experience with credit cards. And the UI is very attractive. It's easy to use. It's kind of gamified. It's kind of fun. And so those aren't necessarily bad things. Again, I like that the UI is simple and straightforward and easy to use. But when we start looking at how are we marketing our products and services, is it in the best interests of the people that we're selling into? And so that's the first part that I would have a warning on with the credit card. The 3% cash back is great if you are a strong wealth builder that doesn't spend more than you need to, and you're really disciplined with paying off your credit card balance. But I think that there's an attraction to it that's more of a status thing. You want a gold card that you're showing the person that you're at a restaurant with, and it's more focused on um, this outward display of wealth. And for that, I actually have a video, which I think I'll put up here on the side, that talks about not being a striver. And so part of the marketing trick that companies have is around this type of thing. And so if you watch that, I have a undergraduate in marketing and advertising where we look at, in a way, how can we trick people into spending more money, and this starts crossing that line. So that's how they think about making money off of people that aren't as experienced with credit. The other part of it is, well, then how do you make money in the gold ecosystem? And Vlad talks a little bit about that in this next part of the video.
And for customers that are transacting, it's all about the ecosystem benefit. And we've actually seen data on this from Robinhood Gold customers. Robinhood Gold customers are much more likely to adopt all of our other products. Their balances with us are higher. Their average revenue per user is multiples of a non-gold customer.
Now, as someone with a corporate strategy background that looks at ARPU, which is revenue per user, you have to ask, does the corporation have their customers' best interest in mind when they're looking at ways to juice up ARPU? And in this video, he talks about how it's delivering a lot of value for customers. And so to look at the value, I want to look at how does Robinhood and Robinhood Gold make money primarily, and are the features that they're delivering to people helping them build wealth, or is it something that might be harming them? And to start getting into that, let's look at this final part of this video where he gets into some of the features that they're delivering.
The whole idea behind Robinhood Gold is if you're a high net worth individual and you're accustomed to getting a level of service from your bank or other financial institution, we want to open up that sort of private client, high net worth experience for just $5 a month to the mass market. And that's where the retirement offer comes in, the high yield on cash, the premium credit card. All of these are products that you'd have to have a lot of money to be able to qualify for. And we're just trying to open them up to as many people as possible.
Okay, so in that last video, I want to make a couple comments. I think there's this marketing pitch that Robinhood has that they're delivering the 1%er features to the 99% of us. And I have some hesitancy with that, because the things that I see Robinhood delivering features on are focused on things like high risk option trading, margin lending, being a more active trader, and proposing that the way to build wealth is to be more active as a trader. In fact, some of the features that Robinhood Gold talks about is you have access to level 2 market data, so you can start being more active in the market. And I think the risk is, if you're new to investing, you might believe that that's how you need to participate in the market to build wealth when it's actually quite the opposite. And I'll get into that in future investing videos. But the point here is that the marketing spin is like, look, we're trying to democratize investing and the financial services industry. But if I'm a high net worth individual, let's say I'm a billionaire, and I have a huge amounts of assets, and I start doing I start using debt to pay for my lifestyle, there's really no risk to me because I'm someone that has a ton of assets. And if something goes wrong and my debt gets called, I will be able to pay it off. But when we start delivering these services to someone that might be living on the edge, maybe you're someone that's in debt today, or you have very little money, and you're starting to almost gamble in the stock market, and you get access to margin loans where now you're not even trading with your own money, you're trading with Robinhood's money, placing risky bets that you hope are going to pay off because you're in a situation where you're kind of desperate for money. That's a recipe for disaster. And I don't see giving margin loans to just anyone as a way of democratizing people's best interests. In a way, it's just making profit for Robinhood. So let's talk a little bit about how they make money and where their primary income is coming from. Okay, so I'm in Robinhood's annual report, and the first thing I want to look at is just how does Robinhood make revenue? And the thing that stands out the most to me is that when I look at the transactions that Robinhood makes, the way they make their most money is within options. In fact, you can see that in 2021 they made almost $700 million. Last year, they made $500 million in options. It is the primary way they make money. And then second to that, they're making money off of cryptocurrency trades. And so inherently, there's nothing wrong with options. I don't trade options. I've done very well in investing, and I've never had to do the things that Robinhood is saying you might want to do. And the truth is, studies out there that show that actually 9 out of 10 retail investors lose money in options. There was uh, a report out from MIT Sloan that looked at options and retail investors and the incredibly negative impacts that it's having on wealth building. And so, just as just my personal opinion, is that options are in the best interests of really most people. And the problem that I have with Robinhood is that they make option trading incredibly easy. In fact, if you open up an account, and maybe this has changed in the last few years, because one of the things that happened, and I'll show this, is they were fined $70 million, which was the largest FINRA penalty ever for misleading customers, where they talk about millions of customers affected by widespread outages in 2020, when a lot of the meme stock betting was going on. And then thousands of customers were approved to trade options, even though it wasn't appropriate for these customers to do so. You could argue that Robinhood is just delivering features that it's up to the end user to decide if they want to use. Again, I'll give you my personal opinion. I kind of think that's like giving a loaded gun to someone that doesn't know anything about firearms. It's really risky. And if you don't have the right amount of training for something that can really financially harm you, and you're operating from a place of almost gambling, then you can really get hurt with options. Okay, so then outside of options, let's look at how Robinhood also makes money. So the other bit is they make a lot of money on margin interest, and you can see that over the last 3 years they've actually had an uptick in margin trading. I don't think you should be trading in the stock market on margin, especially if you don't have the background as a professional investor. It's not the path to wealth building, in my opinion. And the problem here is that Robinhood is going to be focused on these different tools. The bigger caution that I would have is that by getting into this gold ecosystem, you have to look at what Robinhood is going to entice you to do. And if you're disciplined and you're not going to get into options and you're not going to start trading in margin loans, then the ecosystem might be fine. And that's why I'm on the fence, is like, I know I'm not going to do these things. I know I'm not going to go into credit card debt. The things that they're going to profit off of and that they want people to use. I'm not going to really fall for, frankly. And so for me, it's a way to make money. But as I'm making a video around, would I recommend this gold ecosystem to other people? Well, one, this is just my opinion, and you have to make your own financial decisions. But if I had a child and they were 18 years old, would I be encouraging them or opening up a Robinhood account for them as a way to get into investing? The answer for me is 100% no. I think there's an app out there called Acorns, which I've only looked at over the weekend. It looked a lot more encouraging to kids to get into how to build wealth, the more practical side of wealth building, not this high risk activity. And so when I think about what's in your best interest, I have to wonder if this ecosystem is really there to help you build wealth, or is it to help them build revenue in these different areas? Okay, and so the next thing I want to get into is the profitability of Robinhood. Robinhood, I believe, launched in 2014. I'm doing that from memory, so I might be wrong. But initially was more of like, in my opinion, kind of like a fintech firm. And so now as they're kind of getting more into a regular brokerage with Vlad's focus on kind of being an all-in-one, I wanted to start looking at, well, what is the financial viability uh, as opposed to kind of like a tech growth startup company, one that I would have confidence investing or putting a lot of money into. So the risk here, and I look at their net loss for the year. They've never been profitable. And while in 2021 they had a $3.6 billion loss, and this year they're down to only a negative $541 million loss. I do start to question: are they going to be around for the long term? Is Robinhood safe for me to put a lot of money into? And so then I compare it to something like Fidelity. And to be fair, the pro I like about Robinhood is that they are a publicly traded company, and so their standards for reporting and the visibility that you can get into their financials are a lot more transparent than what you get with a private brokerage like Fidelity. However, Fidelity's statements last year, where they look at the same period, their revenue for the year was $28.2 billion, and their operating income after expenses was $8.5 billion. They have almost $13 trillion under administration. And so when I just compare broker to broker from a financial viability perspective, um, it doesn't mean that anything bad will happen with Robinhood. I don't know. But if I'm going to have a lot of money locked into an IRA within a brokerage that I have to have for 5 years, I don't know what's going to happen to Robinhood in the next 5 years. And so that just goes into my calculus around, is this a company that I want to do business with? So the next thing I want to look at is, how does Robinhood make money with fee-free trading? Because that is a pro. You don't pay fees when you trade, but what's happening on the back end? So Robinhood makes money through being paid by market makers, these guys here. So like Citadel Securities, which is one of the largest hedge funds in the world, for order flow. And so what happens is, when you place a trade on Robinhood, is it goes to one of these market makers, and these market makers pay for the order flow that Robinhood sends them. And there was a whole lot of drama about this in 2021, and it's not really pertinent to this review, but you have to wonder, is Robinhood acting within your best interest if these large market makers back in 2021 were almost 80% of the revenue that Robinhood made, and still in 2023 is 40%. Again, it doesn't impact the fee-free trading portion, but is Robinhood acting within the best interest of the 99% that they say that they're representing, or is it really a place for Robinhood to profit off of people that aren't educated, making risky bets as they funnel trades to hedge funds that make billions upon billions of dollars every year? Okay, so then the last thing that I wanted to look at was, I did mention that I thought was a pro was that they offer ETF recommendations for their retirement accounts. I was interested in this because I wanted to give a fair review of, are they just positioning margin trading and options, or are they offering investment education that actually helps people? So, as a pro, they do offer retirement guidance that proposes different ETFs. They're focused on low cost investing, which I think is awesome. This isn't a criticism of just Robinhood, is that the financial industry makes a ton of money by creating really confusing investment vehicles that people believe that they need to pay for in order to build wealth. And so by complicating things, they justify their own existence. And so my goal in this channel is actually simplify investing, so easy that you don't really have to do much, and it's all just this automated thing. The thing I would call out here is when I look at the amount of ETFs that they offer, which is here, it some of these are really good. This isn't a huge criticism because inherently nothing's wrong with each of these vehicles if you have a lot of conviction behind them. Um, but if I'm operating from a place of these are the recommendations given to first time investors, again, I haven't looked at their educational material, so I want to be fair to Robinhood. Maybe they have a really good educational platform where they talk about each of these and they give you perspective around what you actually need and don't need. I don't know because I don't have this recommendation tool, so I can't look at it. So I would be interested in how they do it. And then my caution would be making sure that they're not overly complicating an investment portfolio for a new investor, setting them up with complication that they don't really need in order to be successful. Okay, so that is in-depth review of the ecosystem at Robinhood. So my conclusion would be to you have to do your own due diligence around what you're interested in with Robinhood. If you're just interested in the pure math, I think the ecosystem in and of itself could be really beneficial. Um, I think the risk is that when you get into this ecosystem, you will most likely be tempted to become a more active investor. You may be tempted to take out margin loans. You may be tempted to take high risk option gambles, all of which is what Robinhood's focused on as a profit motive. And so when you look at where their profits are aligned, I don't see it aligned with your best interests at heart when it comes to this ecosystem. Now, if you can avoid all of that, Robinhood offers really cool features. Like I said, they have fractional investing with their ETFs. They don't have fees for trading. It's a really clean UI. And again, they do. They reward people for saving with an IRA, and their credit card offers a better percentage cash back than anything else out there if you don't go in debt with it and you can avoid extra spending and you're not doing it as a status trap. So I would have a whole lot of asterisks around how I would recommend this to people depending on your own situation, and it's really why I'm on the fence with it. So I would be really curious to know your experience with Robinhood. Maybe you've had really good experiences, and my skepticism is something you don't agree with. I would love to hear that. Um, but I hope that this has provided a fair view of the ecosystem. And if you're a new investor, that you have a better understanding of the things that may harm you, and you can make a balanced decision on what's best for your situation. So I hope this has been helpful as you start your week, and I'd love to hear your comments on the Robinhood platform and the different products they offer.